So, have you ever seen those online ads? You know, the ones about like crushing it in the stock market.
Hmm.
And you think, man, I want to be crushing it. But then you remember like high risk, high reward.
Right.
And sticking your money in a savings account suddenly doesn't seem so bad.
Yeah, that's that constant push and pull between risk and return, and it's something that impacts pretty much everyone, whether you're, a Wall Street hotshot or just trying to figure out your monthly budget.
It's true. And that's actually what really got me interested in the article we're diving into today. It's like this fundamental idea, but we see it everywhere, not just, Wall Street.
Absolutely.
But okay, before we get too far ahead of ourselves, let's break down the basics here. Risk, return, what's the connection?
Well, at its core, it comes down to this. Investors, they need a reason to take on more risk. There needs to be a benefit to potentially losing money.
Makes sense.
Like, think of it this way. You could stay at your current job, right?
Mm.
It's stable, it's comfortable.
Sure.
Or you could take a chance and start a business.
Big risk.
Huge risk could be a huge reward. Could also fail miserably. It's that potential for a bigger payoff that makes taking the risk worth it for some people.
So it's not just about how much you stand to gain, but also like how okay are you with things potentially not going your way?
Exactly. And that's where understanding all the different types of risk becomes super important. Like, for example, reinvestment risk. So back in the 80s, when interest rates were crazy high,
Oh, wow, yeah.
people were reinvesting their bond yields, but at way lower rates than what they had initially. Talk about a nasty surprise.
Wow. So it's not just this big, scary risk monster. There's like different, I don't know what, species, versions of it.
You got it. And learning about these different types of risk, well, that can give you a lot more control, right? It's not just about blindly chasing the highest return.
Okay, so what other risk species are out there?
Well, there's foreign exchange risk. Basically, what that means is if you invest in something overseas, changes in currency exchange rates can impact how much you actually make.
So, like, if I invest in a company in, say, Japan, but then the Japanese yen falls against the dollar,
Yep.
my investment takes a hit, even if that company is doing really well.
That's the gist, yeah. But you know what I found really fascinating in this article? It's the whole thing about subjective versus objective risk.
Okay, I gotta admit, I don't really know the difference. Break that down for me.
So objective risk, that's all the stuff you can measure. Historical data, volatility, numbers. Subjective risk, on the other hand, well, that's more about how you personally see that risk.
So, like, even if everything looks good on paper, if my gut is telling me something's off, that's my subjective risk radar going beep, beep, beep.
You got it. That's a great way to put it. And this is where things like behavioral finance come into play.
It's like that feeling when something seems too good to be true, Like maybe my gut is onto something here.
And you know what? Sometimes your gut is the best risk assessment tool you have. The article mentions how much risk we're each comfortable with. Our risk tolerance depends on a ton of stuff. Age, income, what our goals are, all that.
Yeah, and that reminds me, this is totally where I had to learn about risk the hard way. Remember a while back when everyone was going crazy for those, what were they called, meme stocks?
Oh yeah, the meme stock craze.
Yeah,
Talk about a wild ride.
it really was. Well, I got totally caught up in the hype, thought I could make a quick buck. Let's just say my attempt at being a, what do they call it, a diamond hands investor didn't really work out as planned.
Yeah, it's so easy to get caught up in the excitement, especially when it seems like everyone's making money except you. But those are the times you really got to, take a step back. Figure out what you can actually afford to lose.
Yeah, a lesson I definitely learned the hard way. But this is interesting to me because I used to think like high risk, that equals huge reward automatically. But it sounds like it's not so straightforward.
Yeah, that's a common mistake. It's easy to only see the success stories, the people who took a chance and ended up millionaires. We don't always hear about the people who lost everything.
Makes you think. So it's not just about chasing the highest possible return. There's more to it than that.
Way more.
Yeah.
Let me give you an example. Imagine a company, right? They decide to put everything into this brand new product. Like, this is it. This is going to change everything.
Okay, I'm imagining it.
So this product, it could be a total game changer. Like revolutionize the entire industry, make them billions.
Okay.
Or it could totally flop. Like nobody buys it and they're left with nothing.
Ouch. So I get it. It's a gamble. But in the business world, just like investing, you got to take risks sometimes.
You do. But the key is, I said it before, it's got to be calculated. It's not just throwing darts at a board and hoping for the best. Research, due diligence, understanding what you're getting into, all that
Just
matters.
kind of like instead of just jumping out of a plane, you're making sure you have a parachute first.
I like that analogy. Preparation is key, no matter what kind of risk you're taking.
This deep dive has really got me thinking about this whole risk reward thing in a different way, you know? It's not just about money, it's like everything.
It really is. Every decision we make has some kind of risk versus reward calculation built in, whether we realize it or not. And look, this isn't about giving you a rule book. It's more about giving you a new way to think about those choices.
And maybe, hopefully, making those choices without freaking out.
Exactly. Like, think about it. Changing careers, moving to a new city, even, I don't know, just trying a new restaurant.
Hold on, are you saying picking what to eat is a risk reward situation?
Well, yeah. Think about it. You could order your go-to dish, the one you know you like. Safe bet.
Okay.
Or you could try something completely new. Maybe it'll be your new favorite, maybe not. A little bit of risk, but also the chance of a big reward.
I've never thought about it like that before. Man, we could talk about this all day. There's so much to it.
Oh yeah, we could talk about this for hours. Different types of investments, behavioral economics, it goes deep. But hopefully this at least gives you a better idea of the basics and why it matters, even if you aren't a big investor.
Totally. So, as we wrap up this deep dive into risk and return, here's something to think about. What's one risk you've been thinking about taking, Lacey? Something you've been putting off because you're a little scared.
It doesn't matter how big or small it is. Could be personal, could be professional. But now, think about how understanding risk a little better and knowing your own risk tolerance, how can that help you deal with that situation differently? Maybe even give you the push you need to actually do it.
Because sometimes the best things in life are on the other side of a little risk. Thanks for joining us on this journey, and until next time, stay curious.